Hi, this is Mark with this week's video update. I'm going to do just a weekly video now, perhaps do another video during the week. I will let you know on the blog. My idea for the future is if we do go around the road of a signal service, it will simply be emails and not a video presentation. They take too long to put together. Right, the coming week. As you know, I am a technical trader. However, in the coming week, we have a great deal of volatility. It's a big news week, including NFP Friday, which, as those of you who follow me know, I don't trade NFP Friday. This week is often erratic and unusual, and there are further parts of the equation. The United Kingdom has a public holiday on Monday, which could disturb the London session because traders won't be there. And also, many of the big boys are expected to return this week, and often when they come back, price can be very volatile for a few days until things settle down. They come back with the big orders and take away some of the uncertainty we've had recently with reduced amount of traders. So the week ahead, my watchwords will be caution and patience. As we said last week, trading from the daily charts, you need to learn both of these virtues. And if you remember, when we went back to last week on the British pound, the previous Friday's candle had been a spinning top doji candle of uncertainty. And what we looked for and what we said we were going to do was to set a trap for price. We were going to wait for price to come up here or to come down here. And what we were looking for was reaction. Either price would break through here with a candle close above this line, for which we will be looking to go long, or the price would come down here and break through and we will be looking to short. So, Monday, day of indecision. Tuesday, price started to come down to where we wanted. Price touched this area here and then actually pulled back above the area. Now, I went to 4 hour. I normally trade 4 hour charts, and what I did was this. This was the Tuesday touch. Then we had a pullback, which was my reason for entry. You could have entered any of these other pullbacks here, all of which only needed a small stop the other side of this trend line, and away you go. And at one point I think we're about 150 pips up on this trade. So for the week ahead we have a similar scenario. Price has come back on Friday, spiked through the major area of support from before. We have a very bearish candle now, which strongly suggests that price would fall away. So a brave trader on Friday would have got in here. I don't trade Friday afternoons, but had you got in here, you could now be at break even with your entry. And the beauty of this trade would have been, having taken somewhere on the spike, somewhere up here, you would have only needed to put your stop maybe 20-30 pips away above the other side of 6400 for a potential gain move down of hundreds of pips. So the risk-reward ratio here was excellent. Now, for Monday, I will be looking to see whether price comes back to this area again, or whether, as I explained last week, whether it comes back to a 50% of this fib of this particular candle. And to do that, if we look here and say, okay, with this candle, if we were to fib it down, because that's the area we suspect it's going to go, then price may well pull back to 63.20. 6300 will be sufficient for me to get in. 6300, I would place my stop the other side of this recent high, 63.81. So let's go for 64.10 to be safe, with a view to going down. However, the problem with this, as I said earlier, is there is a lot of news this week, and there will be a great deal of uncertainty, and particularly for the British pound, with the British markets being shut on Monday, it will be dangerous, risky to trade. If you're going to trade anything, please do it only on a demo. As I mentioned before, this site is purely for educational purposes. I am relatively new to trading off daily charts, and I don't wish anybody to risk any money on this. Once you feel confident with the process, of course, you may then make your own decision and decide that it's a system that you like or you wish to play around with. Then you make the decision. But do not take trades from this. This is pure education. Right. Now, the other side of the coin with this, of course, is price could come up here and break and go the other way. And if it did, at this area we have a dilemma then. In the old days, the way that you would be able to trade this would be that you would place an order here for a long and here for a short. Now, some of the American clients are not able to do that, although I did explain on the blog the other day, this Forex Executor Pro software will actually allow you to do this again, and it's called a one cancels the other order. So basically you put an order here for a short with a stop up here, and you put an order here for a long with a short with a stop below here. And what happens is, if this trade opens going north, then this trade will cancel, because one cancels the other. And equally, if price was to fall, it would cancel your long. That is an option for you to consider. Right, moving to some of the other pairs. Euro. Euro is in exactly the same position as it was last week. We were here, bouncing around this area of resistance. We have a similar situation now. You could on Friday have taken a short at this point, and a short at this point would have only needed the close of that candle, or if you were braver you could have taken it here, then you would have only needed to have your stop slightly above here with a potential gain down here. Of course, the alternative to all this is that price may on Monday break out from this area. If it does, wait for the candle to close, and then we will look on Monday night, Tuesday, to see if price will pull back to this area. So again, the major areas that we look for is this break or bounce off resistance, break or bounce off of support. I mentioned earlier last week that we have lots of pairs at the moment in a triangle pattern, and what happens with a triangle pattern, we are looking for a breakout. And what happens with a triangle pattern, the nearer the price gets to the point of the triangle, usually the stronger the break. So for example, if price was to break out here, or price was to break out here, we're looking for potential targets. And one theory with charting is that the breakout will be equal to the triangle. So we have a 500 or 600 pip triangle here from the start of the triangle. 500 or 600 pips breakout up would take us to the 150 area, which is psychologically very strong, or of course it would bring us back down here to the 137.50 area, both of which will be very strong moves. The moral is, do not be in a rush to trade. Let's wait and see what happens next. Equally, the Swissy. As I mentioned last week, the Swissy for the last few weeks has been bouncing off this strong support area. This support line goes back to December 2008, and in actual fact you could argue this goes back 3 years. So the chances of it breaking this area, you would normally say, are not very good. However, in view of what's happening next week, and in view of the fact that price has hit this so many times, there is always the chance. So again, this area here is crucial. Again, you could do a one cancel of the other order, or again, you can wait and go onto a 4-hour chart and wait to see what happens. So for example, if the next candle starts to open up, then your stop loss would not have to be so far away, because your stop loss would only need to be down here, with a potential gain all the way up to here. So again, we are in a triangle, but we're a long way from the point. Usually these tend to break out and fake out, but it's something for you to look for. New Zealand dollar. Again, same area as last week. The brave traders, the sensible traders, actually the easy trades, were, if you were taking these, would be off a 4-hour, because every time it's hit this area of major resistance, 6900 area, all you would need to do is short with a 20-30 pip stop the other side. Now we are getting nearer and nearer to the point of this triangle, and again that would normally suggest a big breakout move this way or this way. Again, don't be in a rush. At the moment on the daily chart it's no good to us, because it's right in the middle of the two areas of interest for us. This is a major area of support, and this is a major area of resistance. Again, I would go to the 4-hour chart to look for entry. If you're only able to trade off a daily chart, you will have to wait for the breakout in either direction. Aussie dollar, very similar. Again, triangle pattern. Again, we're near the top. Again, a bearish candle there Friday, which gave us a signal. Again, we could have shorted at this point here.